Hello, you guys. Today we're going to be solving the November 2023 Time Zone 1 Paper 2 exam of IB Business Management. So as you know, I'm starting a IB Excellence Academy where we actually tutor the whole IBTP syllabus. And I personally be specializing in business management as I acquired a really high 7 um, in the subject and have great expertise with it. I've mastered it, so I'm going to begin tutoring it. Okay, guys, so we're going to begin with this past paper. So let us begin. So we're going to start with section A. So section A is about XE Enterprises. XE manufactures gliders and originally manufactured one model, the Seagull. In 2021, XE had a 1.3 million in capital expenditure. We have to make sure we keep that in mind to create a new production line to manufacture a new model hang glider, the Horizon. XE would sell each Horizon hang glider for $5,000. XE's chief financial officer, CFO, budgeted for the sale of the Horizon hang glider. Oh, sorry, budgeted for the sale of the 2,400 Horizon hang gliders in the first year. So now what do we know? We have the keyword, um, capital expenditure, and we have another word, budgeted, for the sale of 2,400 hang gliders in the first year. Okay, so, and we also have, would sell each Horizon hang glider for $5,000. Okay, so we have all this information, because once you annotate the information, it'll just be really, really easier for you to go on with your paper and just be more efficient and faster. So then we have the budgeted and actual profit and actual and loss account figures. So we have them for the year 2022. We have the budgeted figures and we have the actual figures, and we have the variance, which is very, very important. And then we have all of these. We have all this information. On 31 December 2022, XE stopped producing the Horizon and sold the machinery that had been purchased to create a new production line for the model for $850,000. And here we have our discount rate is very important. It's very important to keep all of your numerical data highlighted, because in section A of paper 2, you will be responsible for calculations. So let's begin. So firstly, we are going to begin with defining capital expenditure. So what is capital expenditure? So we're going to be using this magenta. So basically, capital expenditure is the money the business spends to acquire fixed assets. What are fixed assets? Assets that have a life greater than 1 year. And then if you want, we can use some examples. In this case, for example, they gave us the example themselves, which is machinery. So we're going to use, for example, machinery. So I think this is a good answer, because here you actually say what capital expenditure is, so you define it. Then you also are more specific and talk about what fixed assets are. That way you actually show the examiner that you understand what capital expenditure truly is and understand the nuance and the details. Because if you show them a simple understanding by writing capital expenditure is the money that business spent to acquire fixed assets, you gain 1 point because you just gave them the basic definition. However, if you give a detailed explanation by explaining what fixed assets are, what they do, and what they are for the business, what they mean to the business, and by also giving them machinery as an example, you actually apply what capital expenditure is. So this is a sort of application. So you actually truly show them that you completely understand, and you just convey your knowledge and your understanding in that sort of way. Okay, so that's it basically. So we have our first question done. Then we have the second question, which says using a discount rate of 6%, and here we can see that we have our discount rate of 6%. Calculate the net present value, which is the NPV of the production line for the horizon at the beginning of the year 2022 and its first year of operating profit. So they mentioned that we also have to show all our workings. So here I'm just going to make my handwriting a bit smaller. So firstly, what is the formula of NPV? So NPV is equal to the original cost. Then we have to add the net profit before interest and tax. We have to make this just a bit wider. Then we also have to add depreciation to all of this. And then we also have to go further and add, not only that, we have to actually multiply all of this by the discount rate in year one, because they did say at the beginning of 2022, 0.934. Oh, 9434, excuse me. Then we have to continue and add the machinery sold, which we have here. This is why we directly just highlight them all. 850,000 times 0.9434, which is our discount rate in year one. So we end up doing this. So we have our original cost, which was 1.3 million. Then we add our net profit, which is 1.350,000. Then you also end up adding 350,000 because this is our profit, net profit before interest and tax. We have it here. And it's for 2022, keep in mind. So we have this. Plus we end up multiplying the discount rate, because again we need the depreciation, and then we end up just adding the rest. So what we end up doing is we're just going to plug these in my calculator, so just give me a second. So we end up getting as our final answer 1,105,670. So this is our answer. Okay, so this is our answer, and always keep in mind, so this is a note. So I'm gonna just get my thick font back and put a note here. Note, always keep units in mind, because you can simply lose 1 point for not adding the unit, even though you understood the whole lesson, you did your whole work, but you might lose a point over the units. So just don't end up wasting, like, your points on that. So now we're going to continue. We're gonna get our big font again. Oh, we got it, and we're gonna continue. So question C. Question C says, okay, so we did this question, moving on. This is a very neat way of doing your exam. So they say, using table 1, calculate the actual sales revenue. So here we need to focus on the actual, so it's better to put in like red. We want the actual sales revenue. So it's X, so this is what we want, X. For horizon X. Okay, so they labeled it X. So great. So here we need to look for sales revenue, right? So we do know that we have all of these, right? These are all given. We have the cost of goods sold and the gross profit. So here, what do you end up doing? You end up using the formula gross profit. This we know from our balance sheets. It's equal to sales revenue minus cost of goods sold, right? So we end up manipulating the formula. So we have sales revenue is equivalent to gross profit plus cost of goods sold, right? So here we replace sales revenue with X. Okay, we replace gross profit with 5,150. Then we add cost of goods sold, which is 6,600. So here, X ends up being 11,750, right? Okay, and then sales revenue equals 11,150. And then we can add a 30 because keep in mind, this is in millions. But this is our final answer. Really, really, really simple mathematical equation. You just have to know this formula and that's it. Now, I do think that gross profit, oh no, gross profit is not in the formula booklet. So you guys have to make sure that you know that formula. So yeah, then we're going to continue and go to question C part 2. So we completed this question. We're done here. Okay, so the variance, so we have to calculate the variances A, B, C, D, E in 2022 deal. So the variance is basically how this affects the business, right? So this is a very, very, very logical way of thinking. So I'm just gonna end up changing the color since these got too boring. So right, so first we have to just add in red 11,750, and then we're gonna go back to our purple. Right, so we're going to start calculating. Let's start with A. So our budgeted figure is greater than our actual figure, right? So what you do all the time is that you subtract the budgeted by the actual figure, right? So here you get minus 250, right? Now we need to think, is this a good thing or is this a bad thing? Because you have to keep in mind, for variance, favorable, you can just tell from the word, it means it's a good thing for the business. Adverse means it's a bad thing for the business, right? So you always, always, always have to keep that in mind. Okay, so let us just keep that in mind. Now, sales revenue. The fact that the budgeted figure is greater than the actual figure means that the sales revenue is less than what the business anticipated, right? And keep in mind, sales revenue, the formula is price times quantity, meaning that the quantity sold was probably less than estimated. So this is a bad thing for the business, meaning it is adverse, okay? So this is a bad thing for the business, negatively affected the business, okay? Then we have cost of goods sold. Cost of goods sold, here we can subtract 6,500 by, actually we need to subtract 6,600 by 6,500. We get 100. Now, is this adverse or favorable? This is adverse. Why? Because the fact that it's costing the business more. So the business is spending more money on cost of goods sold. Okay, they're spending more. So here we can just write spending more. Okay, and the fact that cost of goods sold increases is equivalent to gross profit decreasing, which is a bad thing, which is negatively affecting the business, right? As we mentioned. So this makes it adverse. Okay, then for gross profit, as I mentioned, if we subtract the actual figure by the budgeted figure, we are going to get a negative number. So we're going to get minus 350, right? And this is actually adverse because in like a gross profit that's less than anticipated for the business is a bad thing, because it means that either the sales revenue has decreased or the cost of goods sold has increased. And in both cases, it's bad. But in this case, it's even worse because sales revenue has decreased and cost of goods sold has increased. And this is very evident because minus 250 and 100 will lead to the minus 350 result. You get what I mean? Okay. So yeah. And then we are going to continue. So we have expenses. Okay, now this is a different story because here we have that expenses for the budgeted figure and the actual figure are quite different because the difference is 400, right? But this is actually a favorable 400. Why? Because this means that the actual budget was 400 less than they budgeted, right? Which is a good thing for the business because keep in mind, expenses are a cost. Okay, meaning that once costs decrease, this will help the business be more profitable. So this is a favorable circumstance for the business. The net profit before interest and tax, the difference is 50, and this is in fact favorable for the business since their net profit before interest and tax is higher than anticipated. So this will help the business because they will make more profit. Meaning that the interest and tax was probably less than anticipated, which is a good thing because this means more profit. Oh, sorry for the fact that I said net profit before interest and tax means that their last, probably no, that's wrong. But this is because actually the expenses were less. Okay. So once the expenses shrunk, the net profit before interest and tax increases. Don't mind the small thing I said. Okay. So this is it basically. So just keep in mind the lesson I just reviewed right now. Okay, so we can just write on paper or like on exam, whatever. Then we have to do D. So for part D, the question says, referring to your calculations in part C. So it's very important to keep in mind that the IBR are trying to help us here. They told us your calculations. So this means the variances. In which variance had the greatest impact on XE's profit variance 2022. So here we need to talk about both. Keep in mind, we have to talk about the actual sales revenue because we need to talk to, they said calculations, plural. So we have to talk about both the questions we just solved and addressed. And we have to explain which variance had the greatest impact on um, XE's operating profit variance. So here we can see that the variance which had, so in my opinion, what we should do is that we should split the favorable and the adverse, right? The most adverse effect on, or let's say impact, let's use the word impact on XE's operating profit variance is the sales revenue, right? Since it is 250 less than the budgeted figure, causing the gross profit to automatically decrease by 250 or like 250,000, whatever. I'm just gonna write 250 in this case. Or the best thing is to do this 250 and then write 1,000. And here we can just do the same thing. It's much better to use the currency and the numerical data so the examiner wouldn't get confused and feel like you got confused. And then we can also talk about how furthermore the cost of goods sold increased by 100K. Let's put the currency in the actual figure, causing gross profit to decrease by a further 100K, making gross profit adverse by 350K. So you see how we literally addressed all A, B, C by just talking about one. then we have to continue because remember, we need to make sure, because we have to refer to all of our calculations. So we referred to the calculations in question C, right? So this is done. Now we have to refer to the other variances. We talked about variance A, we talked about variance B, we talked about variance C. Let us continue talking about D and E. For the variance which had the most, I don't know. I really don't know what happened, guys, but something just happened to my screen. Okay. So yeah, my screen is back. It's fine. I just really don't know what happened. Okay, so to move on is the expenses as it was 300K. Oh, sorry, it's 400K less than budgeted. Meaning, so here you have to show the examiner that you understand what's happening. You're explaining why it's favorable to the business, meaning the business or XE enterprises saved 400K, hence having a higher net profit before interest and tax, which is also favorable for the business as the variance was 50K. Okay, this is a very sloppy 50K favorable. Okay, so here what did we do? So firstly, we mentioned every single variance. So we talked about all the calculations done in part C. So this is perfect, done. Then we not only talked about we not only answered the question, which we talked about the variance that had the greatest impact, but we also talked about why. We explained. So we did our explanation part by saying why, how. So these two were also done, okay? And talk about how it impacted Acti's operating profit variance, okay? So we talked about everything. So we talked about, I'm gonna try to find another color because using the same color is really distracting. Talked about how sales revenue, both sales revenue and cost of goods sold affected the gross profit. So we talked about that. We talked about the actual impact, which is perfect, which is exactly the verb they used. Then we continued by talking about how the expenses affected net profit before interest and tax. And we talked about each variance. So this is how it's supposed to be done. Okay, so we talked also about the variance, we talked about adverse, and talked about favorable. So we did all of part one. So part two, I was solving this for a student before, but let us continue. So now we're going to be doing BE, bonds, electrical supplies. So this is done. Question one is completed. We're going to move on to question two and use another color font. So let us begin. So we have question two. We're going to begin by annotating and everything. So let's just delete everything. Just a second. So bonds, electrical supplies. So bonds, electrical supplies is a wholesaler operating in the tertiary sector. This is a keyword. Oh, let's underline our keywords actually. It's much better. Tertiary sector. Purchased more stock than usual to take the advantage of discounts in the several electrical supply manufacturers were offering. However, much of the stock did not sell. Here we have all of our financial information, financial data. We have everything from financial data and information, right? So let's begin. So the first question says, state two types of businesses or organizations other than a wholesaler that operate in the tertiary sector. Great. Tertiary sector. What does tertiary sector means? It is basically a sector that offers services, right? Okay, so they offer, oh, sorry, here to make it clear that they offer services. And the fact that they use the action verb state is that you just have to say it. It's just clear. You don't have to justify, you don't have to do any of these things. You just have to say it. So think of a service. We can talk about restaurants. They provide a service because they make us food. And they also get waiters to get us our food. They basically just do of what we want. We ask them, so they get us fed. So it's a service. We also have hairdressers. They said two types. So I'm going to say hairdressers. But if you want other ideas, we also have, so I can just tell you some tertiaries. You have cinemas, you have hospitals, you have schools. So yeah, but these are two. So that's it for now. So now we have question B. So question B, they want us to calculate, okay? So they said they want us to calculate the current ratio. So we do have the formula of the current ratio in the formula booklet. So this does not have to be memorized in the 2024 syllabus. But I'm just going to write it down so you guys know. Current ratio, it basically just shows how much current assets and current liabilities you have, because it basically compares the amount of current liabilities and current assets that a firm has. This is the job of the current ratio. So to calculate it, we basically just put current assets over current liabilities. Like that's just really what you have to do. So current assets, let me just zoom this in again. Over current liabilities. Now we need to focus on the current assets and liabilities and like break them down, right? So I'm gonna just use this dark blue. So what are current assets? Current assets are cash, their stock, and their debtors. Okay, so just keep that in mind. And it's better actually to put debtors before stock, because it's better in the IB business management to arrange them by liquidity. So here I'm just going to put another note. So here, just keep in mind by liquidity, which one's more liquid, because cash is obviously the most liquid because you can obviously directly sell with it. But then you have debtors where they give you the money back, so it takes more time. It's not as direct when you have stock, which you have to sell and break down. So it's the least liquid. Then you have current liabilities. So in this case, the current liabilities we do have are creditors, okay, and we have 180-day loan. And I'm going to explain why. Okay, this is very important for me to explain why. Because current assets and current liabilities, they're short term, okay? They're short term, meaning that they are for less than a year. So I'm going to use even another color. So here we're going to put less than 1 year, which is the reason that the long-term loan is not a current liability. Not a current liability. Okay, so keep that in mind. So now what we end up doing is that we are going to end up adding all of our current assets and current liabilities, right? So here we have, oh, and we have to keep in mind something very important, which is a trick in IB. Here they gave us for 2021, right? So we need to only focus on 2021. So let's begin. So I'm just gonna take green and move forward. So 3,000 cash, debtors 2,992, and then we have 180 loan, 180-day loan, which is 1,200. So let us begin doing this fast. So 3,000 plus 2,992 plus 1,200 divided by, so I don't like this line, divided by the creditors, which in this case are 1,500 and 180-day loan. Oh, you see, I made a mistake. I mixed up the stock with the 180-day loan. So I have to fix that now. So stock 180-day loan. So here I'm just going to put 1,200 and 1,500, right? And here I'm going to change the 1,200 by 6,000, right? So this is it. And then we end up just doing all of our work. So we get 11. So I'm just going to like do my calculator 1 second. 11,992 divided by 2,700, you get your answer, which is 4.44. And there is no unit, okay? So this is for current ratio, right? Now we need debtor days. So here we have part 2. And here they also specify that it's in 2022. So now we need to focus on 2022, right? So for 2022, we need to look at the formula for debtor days, and it is, in fact, in the formula booklet. So it's basically debtors over sales revenue. So debtor days but since we have the word days, which is crucial, we have to multiply by 365 because we have 365 days in the year, right? So what we end up doing is that we end up putting 8,908 because this is the amount of debtors we have in 2022, 8,908. And this is our sales revenue in 36,800 in 2022 times 365. Now I will just put in my calculations. And then we get the number 800.35. So then we have to round it to 889 days because again, days cannot be in decimals. So keep that in mind. You have to show the examiner that you really know what's happening and you understand the nuances. You're not just applying, but you understand what you're applying. You're applying with knowledge. Okay, so then, and obviously if you don't write days, then you don't get the full marks. So we did this question, we did this question, we did this question, we did this question. Now they want the stock turnover in days in 2022. And again, the formula is in the formula booklet for this question. So for stock turnover, so the formula is average stock over cost of goods sold. So we don't have average stock. So you need to find average stock, right? And I'm pretty sure that the formula for average stock is in fact in the formula booklet, and it is. So it's basically the opening stock plus the closing stock divided by 2. So the opening stock in this case is 6,000. And now I'll explain why. Because it's in 2021 is 6,000. Plus closing stock is 9,246 divided by 2. Because this is the closing stock in 2022, right? So now I'm just going to plug these in the calculator. You get 7,623, and keep in mind that this is the actual stock and the stock has a value. This is why you add a unit, okay, which is the currency. Now we're going to put average stock 7,623, and they want it in days, right? So we have to add, multiply by 365, keep in mind. And then divide by cost of goods sold, and they want it in 2022, right? So you have cost of goods sold, 18,600 times 365. Let me plug it in my calculator. So you have 149.59, which is basically 150 days, because again, days cannot be in decimals. So this is it for all of these questions. Now for the last question, C, they say, referring to information in Table 3 and Table 4 in calculations of Part B, explain the changes in liquidity between the years 2021 and 2022, which is the financial data they gave us. So here we have to quickly answer that the current ratio is 4.4, whereas the ideal current ratio is between current ratio is 4.44, whereas ideal current ratio is between 1.5 and 1 and 2. Hence, this is a negative thing for the business, as the current ratio, as the increase in current ratio from 4.44 to 5.46, because again, we have to refer to information in Table 3 and 4. If you don't do that, then you do not get the points, is due to increase in purchases, which is why we have an increase in cost and goods sold. So we have to explain that. And this caused stock to increase. And keep in mind, stock is an aspect of current assets. Okay, so also you have to talk about increase in debtor days. Okay, so this will cause the current assets to be much greater than current liabilities. So this is it for the video. Thank you guys for watching. I hope you enjoyed it. Please subscribe, and you can always watch my YouTube videos and understand. But if you actually want tutoring, then soon there will be my IB Excellence Academy program, where I will actually be going over the whole entire IB Business Management syllabus from section 1.1 to section 5.9. And this is it. Thank you so much, guys, for watching. Bye-bye. And the website will be done soon, so it'll be in my link. Bye, guys. I mean, in my description. Bye, guys.